communication through to a much higher level of engagement reporting. So if we start with the basic, this is literally, as it says, very basic, a few pages on a website or perhaps a few pages in an annual report. Usually done by marketing or communications, and it's not aimed at a specific stakeholder, so no thought really has gone into what information are we trying to transmit, who to, and what is it we want to achieve at the end of it. The information probably is not strategic, more compliant. You may have a mission statement, a strapline, and a mini case study, but that's about it. Happily, few companies are at this point, and a CR-specific reporting option is what a lot of companies start out with. And this can be a standalone report or a dedicated section in an annual report, which gives details of the mission, the strategy, how the sustainability strategy fits in with the overall business, what accountability the organization is saying they have, what the targets are and improvements. This is much more strategic, so it's giving strategic information. There is information which is aimed at your key priority stakeholders, and there is usually an invitation to engage for them to feedback with you. It's still one-way communications to them, but it's an opening the door, an invitation for them to communicate back to you. We then get through to advanced reporting, and advanced reporting is when, as an organization as a whole, corporate responsibility or sustainability is seen as integral into the whole business approach. So it's incorporated into business strategy. Now in this, usually the organization will have specific KPIs and be very open and honest with the progress, both positive and negative. Specific business measurements such as numbers of non-compliance to ethical codes and the consequences of this. So this is much more detail, and it's sending an incredibly strong message that this organization takes sustainable business very seriously. The organization will use a reputable framework, and this reporting process is usually done by the CR and the marketing team together, and always a board member who has a dedicated role and responsibility for sustainability signs this off with the CEO. So as you can see in this advanced level of reporting, there's much more information being given, much more transparency, and much more setting of the tone of the organization and how they want to be a sustainable business. So those who want to be a leader in sustainable business, for example, often move quite quickly through to this advanced reporting level. And finally, there's the game-changing reporting, and I'll say straight off that there's actually very few companies who do this. It's very difficult, and an organization generally has to be further along the stage of maturity to do this game-changing reporting, but it is incredibly significant, and more regulations are starting to look towards this. And at some point, I would say probably over the next 10 to 15 years, this will probably become a regulatory standard that organizations have to adhere to. It already is for some small SRI funds as well. So game-changing reporting is really going to the core of the business, and is looking at when externalities are internalized into the organization. Externalities are costs of things that the company doesn't have to pick up, but are happening because of what the organization is doing. So for example, pollution, water use, impact on communities if they take the business out of there, etc., etc. So what the organizations do is understand, well, these are the impacts we're having. If we had to pay for that, what would that do to our balance sheet? What would that do to how much we have to charge for our products? And so they internalize these externalities into the organization, and their reporting is integrated into the balance sheet. So there's one balance sheet incorporating economic, social, and environmental impacts directly into the reporting process that they have for all stakeholders, especially shareholders. It's very important that this game-changing reporting has sign-off from external auditors, and especially, of course, from the CFO and the CEO and the board itself. The forms of this game-changing reporting is triple bottom line, integrated reporting, and true cost accounting. And I do stress again, there are only a few companies who are operating at this level, and they are true leaders across the world in how they both embrace sustainability and in how they measure and report on sustainability. So this game-changing reporting, I mentioned triple bottom line reporting, and this is a really interesting movement, step that. This is a really interesting approach for triple bottom line reporting, where the company identifies measures and then reports on their social, economic, and environmental impacts. However, this will not typically be within the balance sheet, how the multiplier effect of their economic impacts, and they will report on that, and they will actually set KPIs for reducing or increasing negative or positive impacts. So they are triple bottom line, which was a term initiated by John Elkerton quite a while ago, is literally looking at the economic, social, and environmental impact. Integrated reporting is another platform for reporting as well, where there is not two separate reports. There is the one report, usually there's one financial report, and then there is the sustainability report. In integrated reporting, this is brought together. Again, it's not typically where this is brought together with one balance sheet, but they do show the direct link and interconnections between the financial reporting and the performance reporting. And then finally, as mentioned previously, true cost accounting, something I'm personally quite passionate about. For me, I find this the real game changer. And as I mentioned before, this is when externalities caused by the firm are internalized as a cost. And this totally changes the way that an organization costs everything, from internal rate of return, NPV, net present value, through to the term of when they expect returns to come through from an investment or from when a product is launched. So the whole business model actually changed to take account of what the true cost of producing what they produce is. And that does change a lot within the organization. And this is about a change of mindset. It's about a change of taking on responsibilities for their impacts well above and beyond the typical industry player. It's a whole systems rethink of the capital costs, of values, and of accounting. And a great example of this is the PPR group. Last year, Puma, which is part of the PPR group, released their first part of true cost accounting, where they looked at environmental. They're now looking at social, and they will bring that together. And they looked at their impact, environmental impact, as an externality, and they estimated of euros 94.4 million in 2010 was the cost of that external impact, which, if they had been something they would have to pay for, would have been wiped off their balance sheet. So pretty significant impact. And now I'd like to just clarify a few things which a lot of people tell me can be quite confusing when they start off. What's the difference between assurance, certification, and standards? So assurance is when you have a third party assure that the overall approach the organization is taking is one that is sound. So this is the overall approach to being a sustainable business. For example, that is not greenwash, rather it is actually looking at the whole business process, that it's more sustainable and it's managing its impact. And a couple of organizations who would give this assurance are Just Assurance and Fire Sustainability. Verification is very specific to the data. So the data that is being provided in whatever form, whether it's financial data or whether it's impact data or just here are our targets, that data is true and fair. And an example of someone who does this verification is Ceres. You then have evaluation and certification. Now this focuses much more of the management systems for corporate responsibility, and we spoke about that a little bit earlier when we were talking about how far it's embedded into IRR, internal rates of return, the term of when the time period of when a return on an investment should come in. So evaluation and certification is looking at those. It's looking at the management process, for example, of pulling all the information together on how you engage with stakeholders or how you have environmental impact. And examples of these are well-known ones, ISO, SA, and accountability, AA. You then have frameworks, and frameworks are quite tricky, in fact. They're quite difficult because they ask for an awful lot of information. That is the negative side of it. The positive side is that the organization is signing up to very, very reputable and sound and well-researched minimum standards that they are promising to adhere to. And they join an elite group of organizations around the world who are aligning their organizational purpose and values to a much wider level standard of organizational values and standards. The UN Millennium Development Goals and the reporting arm of that, the GRI, is an example, as is the OECD Principles of Governance, who are always improving and bringing out new standards of what level of governance organisations should have. At a regional level, you have, in the UK, the great example is the Business in the Community, BITC CR Index, where you actually fill out almost a 100-page report where you fill out all this information, and then you get graded and assessed, and you also get feedback to help you. And then you get put into the top 100, where you sit within the top 100 or even not within that. And you get a lot of kudos from that, but also what it helps to do is send a very strong message that you're taking sustainability very seriously. And there's also issue-specific frameworks, such as Carbon Disclosure Project, obviously looking at the carbon, Ethical Trading Initiative, obviously looking at things within your supply chain around ethical trading, from human rights through to education, etc., and UK DEFRA, which is on emissions reporting. And then there's expert opinion. Expert opinion is literally, as it says, is when you go to an expert and you ask them what they think of your report. And this can be both positive and negative opinion. And then you put that up front in the report to show we have gone to stakeholders, we have tried to understand how we're doing and if what we're doing is in the right track. If it's internal, which can be a bit weak, this is a statement from the board or the CEO on the level of commitment. Now, it's always good and it's actually quite important to have a statement from the board and the CEO on the level of commitment and on what's being done. But I would recommend not just having an internal statement, but having an external statement as well. And it could be from one of the frameworks or from one of the assurance or certifications bodies, an opinion, their opinion on having looked at the data and looked at what you're doing, of what you're doing and if it's being done well. And of course, there are the financial indices, the FTSE for Good and the Dow Jones Sustainability Index. Of the two, the DJSI is the one that is probably more preferred. And then there's specific reporting for SRI inclusion. Socially responsible investment, this area is growing massively. Out of all the investment areas, the SRI funds are growing very, very quickly. And they have specific criteria from on one level, the purpose of the business, through to another level of your actual performance and impacts across the triple bottom line. And they will actually have specific questions that they will ask you, but if you include those in your report, you probably don't need to do a whole separate report for them. And then, as discussed earlier, there's a financial integration, which is an assurance, which is the true cost accounting is an example of that. You actually get a certification when you have gone through that process. So it's a great assurance of what you're doing and the level of commitment that you're giving. A great example that I want to share with you is Coca-Cola Enterprises. They are a Europe-based part of Coca-Cola Global. And they do a variety of different reporting and use a variety of different reporting platforms to engage their stakeholders. So they have the one-way communication, a standalone report, where they have, it's a separate CR report. So they have their strategy, their KPIs, commitments and priorities within that. But they then go that bit further to get insurance and certification, and so they have the GRI, they report into the GRI, they have ISO, and then they have the SGS as the third-party verification, and then they have the President and CEO statement, as I mentioned, third-party or internal verification. They also have issue-specific, and water is one of their priority areas, so they have an issue-specific water section within their report. And like I said, they report to the global framework and they have commitments to that. And at a UK level, they are in the BITC CR index. So you can see all these different things that they do. All these different things that they do, they go from standard, I'm reporting at you, to I'm providing information for specific stakeholder clusters and my priority stakeholders, the information I want to share with them, through to a third level of I want to engage with you on specific issues, water being an example of this. And then they also go to a fourth level, which is about stakeholder engagement. And for this, they do videos, they have blogs, they go out, do speeches at conferences, they write articles, they have case studies done on them. The CEO goes out and talks at various conferences and to various newspapers. They go and do entries in awards, and they have road shows where they'll go out and talk to various stakeholder groups. So that is much more about a two-way engagement. So they move along this process of starting with a one-way communicating at through to the stakeholder engagement platform, which is much more inclusive. But I will throw this challenge out to them and to you. All this reporting that they do and all the reporting platforms that they use to engage, it does show a good level of commitment, and it shows that they are aiming to be a sector leader as well, and in some issues I would say that they are a sector leader, and it shows skillful stakeholder engagement. But my question is, does it show this financial accountability, this game changer that I spoke about? At the moment, it's not yet at the point where they are either doing triple bottom line, integrated reporting, or true cost accounting, and I personally would love to see a company like Coca-Cola moving on to that, because they could be a wonderful example of a sector leader. So